Members of the private sector and economists have faulted the MPC decision, saying it would lead to fresh job losses and possibly recession. This comes as the Monetary Policy Committee voted in favor of a 400 basis point hike to the benchmark interest rate, pegging it at 22.75% from 18.75%. Well, joining me to speak further on the impact of this decision on businesses is the president of the Association of Small Business Owners of Nigeria, ASBON, Dr. Femi Egbeshola. Thank you, Dr. Femi, for joining me today.
Thank you for having me.
Well, many financial markets players actually saw the hike coming, and we saw a corresponding movement in the stock market, some selling off, there and going to the fixed income markets and all of that. We saw the movement even in the fixed income market in preparation for the hike, and some persons expected as much as 500 basis points. Now, talk to me, was that the case for you and the community you represent? Did you see this coming? Did you prepare in any way for this?
Yes, we saw it coming because it has been speculated over the time that there will be an hike in the MPR rates. But it's difficult for us to prepare for it because of the very high inflation rates that we have at the moment, which is impacting negatively, particularly on the MSMEs and the manufacturing sector. You prepare for an emergency when you have the wherewithal to do so. On our part, it's very difficult to prepare for it. And now that we have that hike, it has impacted and will continue to impact negatively upon us.
Well, I would like to know what your concerns are, because some opine that the monetary policy rate has been ineffective in taming inflation in the country, and based on the fact that the country is not credit-driven. For some other persons, it's more about the unintended effect this could have on businesses. Which of these two bothers you, or are you bothered by both? Dr. Femi, if you can hear me, I'm asking you what your concerns are. There are those who have said the use of MPR really doesn't help in any way to fight inflation, and there are others who are also complaining about the unintended impact this could have on businesses. Some talking about job losses, some talking about, even increase in debts, and some talking about, people not being able to pay back their debts. If you can hear me, I'd like to get your thoughts on this. Which of these two bothers you, or are you bothered by both? All right, so talking about this particular issue, I guess we're having a challenge connecting with our guests. But of course, this is a conversation that has been out there for a long time. People talking about the MPR. For financial markets players, they see it as a good thing because we're looking at having foreign investors come into, the country, and of course having a rate as high as this is something that will encourage them, because at the end of the day you want real returns on your investment. So when you invest in a particular place, you want real returns. But then there is a challenge of the instability in the foreign exchange market, because whatever you gain as interest at the end of the day, you might end up losing it when you look at the foreign exchange pass through and all of that. So these are really concerns that we think should be addressed. And now I guess I have my guest back. Hello, Dr. Femi, if you can hear me, I'd like you to confirm, please. Dr. Femi, if you can hear me, I'd like you to confirm. All right, I guess we just have to wait for him to be able to connect back with us. But of course, still looking at this particular issue, it has become pertinent that we discuss with industry players, especially those in the real sector, so they can tell us how it affects them. Because even the CBN said that while they were making this decision, they thought about output, they thought about growth, and then they also looked at, there are two things we need to consider here, whether it's inflation or it's growth, and they had to settle for inflation, fighting inflation. Dr. Femi, if you can hear me, I'd like you to confirm. Dr. Femi, if you can hear me, I'd like you to confirm.
I can hear you.
All right, so before the internet messed us up, I'd like you to talk on what actually bothers you. I was asking if you're bothered by the fact that, maybe I shouldn't say the fact, by what some persons have said, that NPR hasn't really helped Nigeria to tame inflation, and there are those who are saying that what bothers them the most is the impact this is going to have on the real sector, which you represent. Are you bothered by these two?
Yes, I am. Over the time, we have not seen the very improved effects of MPR rating on inflation. Rather, it has been counterproductive in our own kind of economy. I think the economists here is somehow different from many climes, and what sometimes works in many climes do not actually work here. And talking about this MPR rating, for us in the manufacturing sector and the MSME sector, it has always been very negatively impacting on our businesses. For example, with this new MPR rating, you will discover that it will now be very difficult to be able to access loans from the banks, and it will also lead to more non-performing loans. Already we have a high rate of non-performing loans at the moment, but this hike will actually do more damage to us. We also have to foresee that it will also come to a point whereby consumers will not be able to buy many of our products again, because this increase in interest rates will have to be passed on to the consumers, which will make products and services to become more expensive. And when it is more expensive, it will be difficult for consumers to be able to buy some of these things, particularly now that inflation is in the town and the working capital, the capital or purchasing power is being eroded. That means less patronage of the manufacturing sector. And this will definitely lead to job losses, as you have mentioned earlier. And it will also lead to a number of businesses having to close shop because it will reduce their profitability. It also, in a way, will distract investors from being interested in investing in our businesses, because it is now going to be less profitable. Our accounting books will not be attractive to investors anymore.
All right, I'd like you to speak a bit to, what you just talked about, but this time around, I want you to probably share experiences. I mean, you represent a particular community, and I want to believe your members, talk about these things. Can you speak to us specifically about some of the experiences you're beginning to have or your community is beginning to have?
One immediate experience is the fact that at the moment, you discover that banks don't want to give out loans to MSMEs again. We have a lot of applications in the banks for loans that are rejected day by day. And now that it is more expensive to give out loans to MSMEs, we are going to record more of those experiences. And when we have inflation, our capital has been eroded, we need more funds to be able to operate. And one of the best ways to get funds is to go to the banks for loan. And that is going to be a very Herculean task now. We have other institutions coming to us telling us that the SMEs are not able to pay up their loans and that we should support in recovering these loans. It will be more difficult to also recover some of these loans now, because we have more default when it comes to loans now. And another thing that is going to happen is that we have some MSMEs that are on floating loans. Floating loans means that when we have increase in MPR, the rate of the loan will also increase, that is the interest rates. And when it is difficult for them to pay the old rate, you can imagine how more burdensome it will be to pay the new rate, and that will increase the non-performing loans along the line.
Well, talking about this, I remember there was a time when, while the MPC was increasing or going hawkish on the MPR, on the other hand, or by the sideline, they were also engaging or carrying out what you would call development financing. But that has stopped. What happened? Why did it stop?
Well, at the moment, I really cannot say why we are not having that kind of financing at the moment. But what I know is that the economy has shrunk so much so that a lot of financing has reduced in all sectors and all phases of the economy. In fact, before now, it's easier for us to get or attract venture capital to come and invest in our businesses. But because of our fall in the value of the naira and the inflation rate, nobody is really interested in investing in particularly Nigerian businesses, and more particularly small and medium-sized businesses. And that has been a very big challenge to us. It has impacted in our profitability, and we hope that some form of support or intervention will come from government now to cushion this effect, so that by the time the MPR rating is getting some gains at the other side, we will not also be impactly affected. We will also be able to run our business, grow along with the economy, and continue to support government with the revenue we also generate from our own sector.
Now, I want us to look at the communique that was issued, at the end of the MPC. They acknowledged the trade-off between the pursuit of output growth and taming inflation, but they were convinced that an enduring output expansion is possible only in an environment of low and stable inflation. Now, what do you make of this? Growth apparently became the opportunity for gone, if I can use that terminology. I mean, shouldn't balance be pursued instead?
Yes, there should have been a balance. Well, ordinarily, theoretically, we should expect some growth, but that may not be a short-term benefit. That's a journey. It's going to be a medium, long-term goal. And what we need out in the economy is what is short-term that can actually sustain businesses, by particularly micro and small businesses. And that's why we believe that instead of seeing growth, we may begin to see the other side of it. We may begin to see more companies dying. We may begin to see more joblessness. We may begin to see more people abandoning their businesses to travel or to other countries in the name of Japa. We may also begin to see people abandoning their loans and running away from the existing loans they already have because of their inability to pay. These are not growth. Growth in the economics is different from growth in the streets. While we're talking of the economy, we should also begin to look at the life of the common man on the streets. How does it affect and improve the livelihood and well-being of the common man on the streets? This is also very important. We don't see this happening now. We don't see this positively affecting and impacting the common man on the streets as much as it is not with us in the small, micro, and medium-scale businesses.
All right. What are your demands or recommendations for growth in the real sector, even as the CBN might, keep being hawkish? I mean, in the near term.
Well, we expect that government should be able at this time to fund development finance institutions of government, like Bank of Industry, like Development Bank of Nigeria, like Bank of Agriculture, and the rest, to be able to now lend to the real sector at a reduced interest rate. Government can support such that we have single-digit interest rate on loans from this specialized bank to support the economy and particularly the SMEs. We also expect governments to be able to do some form of intervention fund to support MSMEs. We've had a lot of intervention and palliatives in the pipeline. We've not seen it in reality. We are expecting that it should come and come in good time. This will help us to be able to position our businesses. We'll be able to prepare us for export, and we're able to have enough capital to be able to be competitive with other countries when we begin to export, because competitiveness is also very important. With the rise in the interest rate for loans, it makes us more uncompetitive, and that's not good enough. So government has a lot of role to play if they want to cushion this effect on the MSMEs. While we're having the gains on the other side, we should be able to be thinking about the MSMEs, how to grow them, and the strategic and intentional way government needs to support us now so that we will grow along the other side of the economy.
Well, broadly speaking, I would like us to close on this. Shouldn't our reservations and concerns be directed towards the fiscal authority, seeing that inflation in Nigeria is even driven by, food inflation, imported inflation, and we also see the pass-through effects of the exchange rate, which, of course, the CBN identifies as a major factor, as well as the prices of commodities. I mean, is it enough do you think enough is being done to address these challenges?
Well, at the immediate, we have seen a lot of policy reforms that is, to some extent, bringing some relief, and we're also seeing positive results. And to me, that's a good step in the right direction. We hope that that will be sustained, and at the end of the day, we get to where we want to be. Beyond that, we expect something more pragmatic than what we are already seeing. We expect government to be more pragmatic about fixing infrastructure, particularly power, which is very, very key to MSMEs and manufacturers to be able to bring down inflation. We also expect government to be able to tackle insecurity, which is driving away a lot of people from the farms, with increasing cost of food and bringing about food insecurity and food inflation along the line. These are some of the critical sectors that the government needs to work on. I can speak on and on and on some of these recommendations, but time will fail me.
All right. Thank you so much. Nobody ever has enough time to talk about Nigeria. Thank you, Dr. Femi Egbeshola, for your thoughts on the show today.
Thank you once again for having me. It's a pleasure.